Good morning, everyone, and welcome to the European crossover webinar. And we did go on and see indices move higher in Asia, and they actually dipped back, and then they've come back and pushed back up again before pulling back as the whole concerns about another Lehman, which people were totally wrong about, have dissipated. The coupon payments were paid on the Evergrande issue, so that provided this move. So that's where we're at right now. So looking at today, we don't have any data. Looks like industrial sales for Italy, that's at the top of this next hour, but we don't have any data until existing home sales of the US. That'll be at 10 a.m. Eastern. And then, of course, later on we have FOMC. And that looks like that's going to be it. As I said, we saw a pretty good rebound yesterday. Actually, it's a pretty good solid rebound in the sense it took us right to the 50%. And actually, looking on the daily, we went right to the, I didn't even miss that myself, went straight and just about tagged, came up a little bit shy, but you can see here, just about tagged the 50-day moving average before pulling back. And of course, like I said, we made this little run up here on those coupon payments being made. Looks like we're starting to get some decent little bit of volatility that may, continue to carry us on. S&P saw a bit of a similar move. These almost look identical. Look at that. Probably not going to see a whole lot of movement, a whole lot until after FOMC. We'll have to see whether or not the Fed alludes to the taper. And taking a look at the euro, we haven't even really moved much at all. Look at that. We're trading a 21 pip trading range. Bitcoin did go in and drop and continues to stay a bit on the weak side. Actually, the market perked up just a little bit as indices got a little bit better in Asia. So you can see here, we came pretty close to breaking 40. And let's see, taking a look at hapless gold. Hapless gold has actually moved a little bit higher. And I think crude oil also responded a little bit better. We're still trading mid-70s right here. So no big change. I think everybody's going to be waiting until FOMC. With that, we'll just go on and do the analysis. You can see here, the euro hasn't moved anything at all, other than that dip towards 17 a couple days back. We haven't done anything. Obviously, as I mentioned, depending depending on what the Fed says, could see a big mover. So how far can we dip back? I'm just going to go with the body. That's it. 1676. Obviously, there'll be a bigger move if Fed does, were to say taper, but even if they do, the earliest anyone would expect would be around December. It'd just be the announcement of it. They could spook the market. On the upside, if we do, let's say the Fed comes out and doesn't really go that route, then the real resistance would come in right there, 1803. Moving on to cable. Cable's over here sucking wind right now. Been pointing to all those issues, ongoing issues with energy, and would seem like that really has a market where it could be quite vulnerable. I'm just going to put it right there at the end. 35.66. Upside, if things were to turn around, go with the body right here, that'd be 37.71. And these are just, I wouldn't say outliers, but these are pushes based on these moves that would come out of FOMC, pushing the ends a little bit. Moving on to the Aussie dollar. I don't really see any big surprises here. Just don't. Just going to go with the wick right here, which is going to be 71.57. And same thing here. That would come in at 73.72. On to the dollar yen. Just has not been moving anywhere. Same thing, the old 10.26. Downside. Go with the body again, 870. Onto the cash dollar index. We talked about that already. We're already on the week, 93.57. If we got beyond that, which isn't that far away, the next level would be 94.08. That'd be a hard move too if we do that. I mean, to get all the way up there, but the next true level of resistance would be 94.08. I guess we'll mark it off. Things get a little carried away. I don't really see that. Downside, we'll keep the 92.76. And then moving on to Bitcoin. Bitcoin still has a little bit of trouble here. Upside would be right there, 45,237. That'd be a little bit on the stretch side. That might even be too far. Now let's go right there. 44, 136. And on the downside, I'm just going to keep it simple, 40. Which, oh, we had 40,086. Well, that was pretty close then. Because the low was 40,000, looks like 40,063. We had 40,086. We're going to keep that. And take a look at SPOOs. See, they've just gone level to level here. 43.73. Just depends on what comes out of FOMC. We'll go with that 43.86. On the downside, 43.25. Problem is, once you break something like this, it's hard to put it back. So the market was susceptible for a breakdown. And of course, everybody got scared of the boogeyman, which turned out to be false. As I said very early on in the chat room, this was not a Lehman. Then yesterday afternoon, people were saying this isn't a Lehman. And then after trying to make the coupons, then I saw someone say, yes, this was not a Lehman. Oh, yeah, of course, all after the fact. But when you make a break like this, it's hard to put things back together. So even if things were to come all great, this would be super, super tough right here. Realistically, that'd be about as good as they could probably get, which would be if they were to push just above 4,400, and then they would end up rolling back. So let's go on and We'll go and move into the Nasdaq. The Nasdaq stopped perfectly right here. I had this in Asia at 50. The high in Asia, I think it was like 72. Of course, we dipped all the way back here to 15, and then when I did some work on the volume, I said, okay, there's resistance right there, 15,095, which is exactly where they ended up running out of gas. Of course, I wasn't up when they hit here, but that's why we ended up pairing back from there. Key volume level there. Same thing here on whether or not they push. Probably going to see a lot of good volatility. This would be the extreme move here. If the Fed came in super dovish, would be 15,265. I'm going to mark it the same way as the S&Ps. And the most we'd expect initially would be 15,204, once again being fairly dovish. Support right here, 14,925. And that might even be a little bit close, but that's where we'll put it at. Yeah, that makes sense. There's 14,930. A little bit of volume right there. I guess we can go with that, which is 49889. Let's call it 14,890. There's 15,282. This would be pretty key right there. Let's just call it 50. But that's still a pretty good push because we had 15,204. All right, now we got 15,204. We'll call it 15,208. Taking a look at gold. Best case scenario, and that's not calling the top or anything. Like I said, I've been pretty much right as rain on this gold. I don't know why I haven't even been trading it. I'll go with 1793 on a exuberant Fed. Downside 1752. On the crude oil, I'll go with the low of this wick, 71.19. And the low, right there, 69.48. Okay, and there's the bias chart ahead of FOMC. We'll get that posted in the room. And thanks for joining us here on the European Crossover webinar. I'm going to look at silver, natural gas, and platinum. One moment. Well, we're looking at the weekly chart, and we're actually below this key level right there, which is 2277. And that's a key range right there. Needs to maintain that. But support right now is going to be 2192. Oh, that's where they went to. You see that? This low wick? Oh, that's 2192. That's support right there. They have bounced off of it. And resistance is going to be right there. 23.33. You can see that right there. Fairly key too. 23.33. But it's in bad shape right now. I think this whole China thing also scared because of the, I don't know if you want to necessarily consider silver an industrial metal, but I'm saying is all these metals have taken a whack. And some of the big houses have been, at least in a limited basis, ratcheting down China's GDP going forward, their growth. Look at natural gas. Support's right there. Oh, that's exactly where they went to. Golly, look at that. Went right across this wick right there. 471. So that support, they did bounce off support a little bit. And resistance, this body right there. See that? Anything confluence is right here with that next body. And this wick. See that? 3 straight weeks. $5.03. But they would need to get above 503 to just kind of like neutralize this downside move. So get above 5.03. And lastly, platinum. Just go with the body right there. You see, that comes close to that wick too. Not the wick, but almost the body right here. This wick, and then you got the body there. But that confluences with this wick, this body here, the opening, and that would come in right there. Oh, that's where the market went to. 980, 968. You see that? See this wick picks up on that body. You see that? There. And it's 968. 968.8, and that's where they went to. That's resistance right there. So they need to get above 968 and close above there just to kind of like get things neutralized. Not neutralized, but to get rid of the bearishness in this. Close above 968. Okay, with that, we'll call it a day, and we'll see you in the chat room and get that posted. Thank you for joining us here on the European Crossover webinar.